What's up, guys? I know it's been a while, but I'm back for another video. Today, I'll be teaching you guys my future strategy. In the time that I was gone, a lot of stuff happened related to my trading. I realized a lot of things, and I had to make a lot of decisions. And I made the right decisions. I learned through time that I made the right decision, but I had to take a break and just I had to perform on my own before I was able to make this video. So, but I'm gonna explain what happened. So I don't remember when, but whenever I made my last video, I realized $100 in a week is not good, and with the way news was coming out and everything, I was barely in profits, and then Forex is, I don't know, there's too many news involved. There's GBP USD, so I was trading GBP USD, so the Great British Pound and the US dollar would both determine if I could trade or not. Oh my god, something's in my eye. And I was throughout my Forex journey, I would always look at futures because it's all over TikTok, and I get curious, and it was just always easy for me to be oh, when this happened, that would happen after, and I could have traded that. And I was like, why don't I try it? So I remember I would go like this. I'd see a setup happen, and I would go and set it up, and I just see it, and I put lines out for my partial take profits and everything. And I won literally almost every single trade. Oh my gosh, dude, it's in my eye. It's mad annoying. I'd win almost every single time I did that, and I was like, oh, this is so easy. And I just noticed a lot of the concepts that I trade worked a lot more accurately. Wait a second. Am I tripping? Okay, no, I'm not tripping. Alright. Anyways, so I realized a lot of things. I just decided that it would be best if I switched to futures instead of Forex. So another thing, $1,000 account isn't really gonna get me nowhere. Maybe if I was as profitable as I was on $100,000 account, I would have actually been making money. But $1,000 account, a good week would be $100, maybe 200 to 300. But I wasn't even getting any good weeks. I was just getting regular weeks. I was making $20, and I was barely trading because of all the news, and with the tariffs that were happening, it really affected my trading. But anyways, so in this video, I'll be teaching you guys my future strategy for a month or two. I was trading one toxic account. I never failed it. I just want to say I never failed it. But I was testing out a whole bunch of things. I was testing out fair value gaps, how it would if I could just trade off of fair value gaps. I was testing out if I'm good at trading off of the liquidity sweeps. And then I would realize, oh, I win my trade when these happen, so I'm gonna stop doing those because they're not as probable. And then I set rules for myself and everything. I developed a strategy. And in this video, I'll be teaching you guys my strategy, and not just the strategy itself, but the risk part and the emotional part of it. So yeah, let's get right into it. So 6:30 is market open. I'm not allowed to place a trade anytime before 6:30 and anytime after 7:30. I don't care if my model forms at 7:31. as soon as 7:30 hits, I just simply go to the X and I click out. I'm using TradingView. I'm not gonna show on Top Step because Top Step doesn't have the replay option, I think. Plus, I pay for the TradingView one, so I might as well use it. But my eyes, like, something's in it. It's so annoying. Oh my gosh. Oh my gosh. Anyways, so market open. One thing that helps with my bias or the direction I want to trade, NASDAQ is like US stocks, I think. Either way, NASDAQ is estimated to grow like 13 or 12% per year. NASDAQ and ES, something like that. So I'm like, automatically, longs are gonna be more favorable. Plus, I noticed London session and like the sessions before tend to go down. And yes, I do take shorts, but like that's only if there's zero reason to go up. And I will go long if there's still reasons to go short, because the longs tend to win if there's a reason to go up still. Because automatically, longs are going to be more favorable since it's estimated to grow a certain amount per year. Like, it's literally the government, or like, I don't understand how it works, but it's just common sense. If it's good, if it's estimated to grow a certain amount per year and not go down, and it grows almost every year, you should know, like, oh, okay, longs are going to be more probable than shorts most of the time. So the first thing I look for is a 4-hour breakout structure. So a breakout structure is simply this. Maybe we go down a bit, consolidate, go down, up, and then boom, close above that high. But by the way, I learned breakout structures from TJR, and I learned liquidity sweeps, which I will explain a little, from ICT, and I learned fair value, inverse fair value guys from TJR and ICT. And those are the three things I use in this strategy. And then from there, like, it's pretty simple, you know. Break a structure. If it breaks structure to the upside, I'm most likely gonna go long. If it breaks structure to the downside, let's see, go like that, there. I don't know why it takes so long, but if it breaks below that low, it has to close. It can't be a wick. It can't be a second from closing. You have to wait for it to close. Be patient and be disciplined. As soon as you get it, hit buy or sell. Right there, break structure to the downside. And now I know, oh, okay, I'm most likely looking for shorts today. Well, even if there's a break of structure though, sometimes you might trade in the opposite direction. You just have to you're gonna gain a lot through experience, but also hopefully this video helps you. So break a structure for buys, or you just look at levels, draws on liquidity. So I'm sure most of you know what a liquidity is, but it's basically just relative equal lows. Those are pretty close together. So if we're trading up here, I most likely wanted to sweep those lows and then go back up. Or it could go sweep those lows, consolidate, and shoot down to other lows. And then vice versa, it could do the same in the opposite direction. So liquidity are just lows or highs, and they don't always have to be relatively equal. Let me show you an example of high resistance liquidity. High resistance liquidity is a high where it's most likely not gonna get swept, but if it does, then you have no more reason to go up. That's how I treat it. Other people may have other versions for it, but it's how I go. So if there's a quick up move, right, and then a quick down move, that leaves something called fair value. That's just when there's like a long fair value gap and like continuous down close or up close candles. So right here is a strong draw on liquidity, because it's a really far move. Like, people are like, oh, there's no way it's gonna be up there, go all the way up there before it takes out this level. I'm gonna put my stop loss there. Okay, I just drew that. So let's say we're trading, right, and the market goes like this. We're in an uptrend. I see this draw on liquidity. And let's say this is London's low right there. You also want to look at session lows. For me, I just look at London's low. I only mark out London lows. I don't mark out Asian. And I know there's other sessions, but I don't mark any other session but London. And this is also a low. It's a low. It doesn't have to sweep London's low, because I see a reason to go up, which is this liquidity. There's this like little draw, and there's probably gonna be some other ones, like small ones along the way. But it has to be a steep move, because I'll explain right now. So there's liquidity to the upside, right? Now I want these lows to get hit, because if people are saying, oh, we're in an uptrend, I'm gonna wait for it to go down here. I'm gonna buy there, put my stop loss there. Same here. I'm gonna buy here, put my stop. I'm gonna buy here, put my stop loss at that line, put my take profit at the high. As soon as market opens, if I want these highs to get hit, as soon as market opens, I want it to go sweep these. I want a 1 minute break of structure, or a 1 minute fair value, inverse fair value gap, and it has to close through it. So 1 minute break, so boom, 1 minute break. I don't know why that happened. A 1 minute break, and then I enter long, and I simply put stop loss there, take profit at 102. You can hold till it gets to those highs, but it tends to, if you're trading like prop firms, you're not going to be, with Top Step at least, the one I'm trading with, you're not able to like stay in a position for like a day, at least at the time that I trade. I don't care about any of these sessions rules. I only trade my session, which is New York market open. And I don't know if this works any other session. I never tried. I don't care, because it works my session. It's been working. As long as I've looked at these charts, I always see it work, and it's been performing. So break a structure, target a 1 and 2 risk reward, stop loss there, take profit there. Now you're probably like, oh, what if you become liquidity? Well, the whole point of the strategy is you wait for the liquidity sweep to already happen. When it happens, then you have more probability for it to go up, or to go your direction, before sweeping liquidity again. And that's because it already happened, and that's when the big money puts their money into the market, and it just works. Like, I don't know how to explain it. It works, and I'll backtest it. I'm not that great at explaining either. Like, this is my first time like actually going into detail and explaining, but you just wait for it to get hit, and that's it. And then vice versa. So, let me tell you when to go short. So, okay, here, I have an idea. Let me close my door. Okay, now let's say pre-market. We're still in pre-market, right? Oops. Now let's say market opens up here, right? Now let's say market opens, we sweep this high, and the next high is like really far, like it's all the way like a week ago or days ago, and it's like, it's more of like this. It's not too steep. When we take out this high, that's a high resistance draw on liquidity. Now, there's really no reason to go long. So now you look for a 1 minute break to the downside. Boom. Enter there, stop loss there, take profit at 1 and 2, wherever that is. Let's just say that's 1 and 2. Stop loss there, take profit there. That's simple. Also, you need a reason to go short though. So shorting, you have to have more of a reason to go short than if you want to take longs. So I only go short if there's no reason to go high and I see reasons to go low, such as London's low. Let's say that's London's low, and then let's just pretend there's relative equal lows right there. That's two reasons to go short. And let's just say there's a fair value gap, which I'll explain what that is. So fair value gap, London low, relative equal low. It could be one of those. Not a fair value gap. It doesn't matter if there's a fair value gap. There has to be London's low, or like, I wouldn't even say like a steep low, just London's low or relative equal lows. If there's none of those, and we already took out your reason to go long, you're kind of in the middle. Don't trade. Not trading is probably the best thing that happened to me, because not placing trades is one of the best skills that I developed, and is what made me, like, I was able to get good at futures really quick because of that. And yeah, I'm not gonna tell y'all where I'm at on the challenge. I'm not gonna lie, I'm still in it, because like I literally just like completed this strategy like this week, and then now I only trade this strategy, like this one model, and that's it, which I'm teaching you guys. Also, let's say we get this right, and we're just consolidating, and there's a reason to go up, like somewhere here, there's relative equal highs. If you just get a break of structure without a liquidity sweep, I don't care if the trade wins, do not enter. Why? Because the strategy is based off of liquidity sweeping. You want the liquidity sweep to happen. If it didn't happen and it's market open, there's gonna be a liquidity sweep most of the time. It's most likely gonna break structure and then go down here, then do the 1 minute break and go. It's just not probable without the liquidity sweep, because then you're just waiting for it to happen. And yes, you'll win sometimes, but let's say you lose this trade, and then this model forms, and then you lose that trade too, because no strategy is 100% win rate. There's always gonna be a chance that you lose. Like, some random news might come out, something can happen mid-trade, then now you lost double than what you could have just lost from my strategy, from my model. But I did not create this strategy. This is just a strategy that I trade, and I trade confluences that I learned from TGR and ICT. So yeah, don't trade unless there's a liquidity sweep for longs or shorts. Another thing I want to say, so let's say we have a move like this, right? And then we have a move like this down. Like, it's more sideways down than like this. See, that's more steep. This is more sideways. Let me delete that. If we go here, let's say we sweep London's low. So we sweep it pre-market, and then we go slowly. We're still in pre-market, by the way. I'm still pretending we're in pre-market. Oh, oh my gosh. Oh my, what the hell? What happened to my chart? Oh, okay. So I can't do that. Let me move it. Okay. Pre-market still. We sweep the high. Boom, I sweep it. We have no reason to go short. And let's just say there's highs here. Like, there's still highs. There's like a fair value gap or something. That's a reason to go long. ES and NASDAQ are estimated to grow yearly anyways, so it's okay to go long. If pre-market happens, we sweep both levels, but then there's this low right here. If we sweep that low and get a break of structure, let's say break of structure to the upside right there, go long and target that fair value gap, or just do the 1 to 2. I do 1 to 2 because I'm trading through a prop firm. I can't really be in there for too long. When I'm trading my live account, then I'll hold longer. I'll take partials along the way. But for now, I do 1 or 2s. You could do whatever you want. But there's a reason to go up. You swept liquidity. There's no reason to go down anymore because we swept Lennon's low. Take a long. Take a long. If high impact news are coming out that day, don't trade. If there's no volatility, don't trade. Most of the time, when you lose a trade, you're gonna know why you lost, and you're gonna be like, damn. Like, just don't do it again. It's so hard it's so easy to say, because I could say that, like, I had to learn the hard way to not keep messing up, to not keep making the same mistakes. But anyways, guys, I'm gonna back to this. Let me just show you guys what a fair value gap is. I'm sure most of you know. But a fair value gap is 3 candles. You want to go to where the wicks don't touch. So the middle candle and where the wicks of the 2 candles around it don't touch. Easy right there. Fair value gap. If the wicks cover the middle candle right there, there's no fair value gap because this wick blocks it. Let me find another fair value gap. This one right here. That's simple. Fair value gap. Wick ends there, there's space there. That's just fair value right there. Fair value tends to get filled, tends to cause a reaction. But yeah, now I'm gonna show you guys some live. So let's see how many days back we can go. Okay, not that many. Alright, we're gonna start right here. Thursday. So this is like a week ago. Alright, so I'm doing this without knowing the news. Or you know what? I'm actually gonna check the news. So this is Thursday, June 3rd. We got a good amount of days. We got 10 trading days. Okay. Jolt's job openings. I remember this week. I was so bummed because a beautiful trade formed on Monday, but I was waiting for PMI and I didn't trade it. And then I just ended up not trading on Monday. But on Tuesday, I think I did trade. I barely took profit though, because I put my stop loss to break even and then it wicked it. But I'm gonna show you guys what I'm doing now. Like, I was still finalizing the strategy. Like, my entry was the same, but I was still finalizing the way I take profits and like when I move my stop loss. Now I don't move my stop loss or nothing. I just wait for the 1 or 2 to get hit, one level to get hit, and then that's it. And 1 trade per day. Even if I lose, 1 trade per day. But okay, so we're gonna go on the 5-minute time frame. So I'm gonna mark out the levels. Here, let me go mark out Lennon's low. It's down here. Lennon high already got swept. But there's a reason to go up right there. And look, it's sideways. This is a steep one right here. This is exactly what I'm talking about. This is steep. Because look at like the wick and then look how like steep that is. And then we go like sideways. But yeah, this is also steep, but I was already done trading when it swept it. You would have got like probably a 1 or 2, but anyway, let's not look at that. So let's see what happens. And I'm gonna check if there's reasons to trade. So let's wait 2 candles. I have an idea. Okay. Boom. Damn. That's crazy. Market opens. I don't know what order it happened. Okay, market opens and right away we sweep that high, but we also sweep these lows. So now we're allowed to enter a long. Why? although London's low is swept, automatically it's estimated to grow. So we're just gonna look for longs. We have this high right here, and there's also a 4-hour fair value gap. It's not completely filled. Fair value gaps want to be filled most of the time, especially if it's a high time frame one. So let's see what happened. Let's go to the 1 minute. We swept the low. Down close. Okay. Now a possible break of structure formed. Oh my gosh, what happened to my voice? Right there. Where'd the pencil thing go? There we go. Possible break of structure. It might keep going down and then do it, but we'll see. Boom. Enter when this candle closes. So you're gonna enter on this candle. Let's see what happened. Let me put it out 1 or 2. And this is actually like terrible though. It's so ugly. Oh wait. Fuck. I wasn't even paying attention. We inverse this fair value gap. At this point, by the way, when I was trading the funded account, I wasn't trading inverse fair value gaps yet. Because I had to because I was actually trying to pass it while testing these things out. But I was more comfortable with breaking structures. But I would take notes on fair value gaps, seeing if they won. They would always win. So right there, as you can see, we closed through that gap. It has to close completely through it. Enter there. Stop loss there. Take profit 1 or 2. You won. That's 1 right there. Risk 500, make 1,000. For me, for the funded account, that's enough, obviously. But I have another rule. When I pass the accounts, I'm doing multiple right now. Because like after I developed this strategy and like I back tested it for hours, by the way, I put in like so many hours. And I'm already good at controlling my emotions because I have like a lot of experience. So I would have just left my take profit there, but since I'm still passing it and I only need to make 1,000, I risk 500 to make 1,000, 1 or 2, and that's it right there. By the way, I just want to say, so like I'm not lying to you guys. When I was doing this, I only started aiming for $600 to $1,000 per trade this week, and I barely decided to only aim for $1,000 or $1,000 yesterday. I was like, okay, from now on I'm just gonna do 1 or 2 because I back tested and I realized 1 or 2s always win. Instead of taking partials, I'll just do 1 or 2 and then take full profit, pass the account in 3 days. Because taking partials, I only was able to make 1.5 thousand in 2 days. But I could have already, if you include the first trade I took this week, which only made me $300, I would have already passed the account if I was just risking 500 to make 1,000. But anyways, there. That's 1 trade. Now let's go to the next one. Oops. Let me go back a little bit. Okay. Already I can see on the hourly we swept liquidity. We're on the 5 minute. What time is it? It's 8:55. Okay. Let me check news. The first thing you want to do every day, check news. Okay. ADP non-farm employment change. Since it's happening at 5:15, it would have already happened pre-market, so it would have been final trades still. ISM, services, PMI. You could wait for it. I don't remember if I traded or not this day, but we'll see. 920. Okay, we'll mark out the lows and highs. First off, let me see if I have any levels. So I definitely do want this high to get swept. We already swept London's high, but there's that high right there. There's these lows. I don't know. If one of these got swept, I'd be fine with going long. I don't think I'd be comfortable going short. Let me see. Yeah, we inversed that fair value gap. I don't know if I traded this day. I would have wanted it to go up, sweep that high, since we inversed the gap. If it inverses a gap, by the way, it's most likely going to keep going that direction. By the way, this is not financial advice. I'll put that in the description. So, let me mark out the lows. This low. This low. Oops. This low. Okay. This is the macro candle. Okay. Fuck. I hit the wrong button. I'm not even gonna look. Fuck, bro. I low-key did see. I just want to say, 'cause I did see it go down. I wouldn't have taken a short if we swept this high. I wouldn't have traded until we swept these lows. Or any of these lows. But let's see. Okay. Market open, we sweep this high. Once again, I wouldn't have traded it because we didn't sweep any lows. So yeah, I wouldn't have went long because we didn't sweep a low before taking out the high. And I wouldn't have went in short because I still saw a reason to go up, which is this high right here. And that's steep, by the way. So I do want that to get swept. I would be willing to go short after that got swept. But anyways, let's see what happened. Oh, and it has to be pre-market lows. It can't be lows made market open. It has to be pre-market. Let's see. Okay. Pre-market low got swept. Let's go to the 1 minute. Now, if we break structure to the upside, I'll just draw it out as if I took a trade. Fuck. Okay. As you guys can see, we swept all these lows without breaking structure to the upside. You guys see it yourself. We swept these lows. Automatically, I'm willing to go long if we break structure, inverse it for value gap. And as you see, we inverse. We inverse that fair value gap. I would have entered right there. Take profit I wanted to. One to 1.99, whatever. You could target these highs, but once again, I'm just aiming for 1 and 2. There we go. Let's see what happens. There we go. As you guys can see, you would have won. I'm about to do like 9 more of these. And it also happened after news came out, which is even better. So another reason why you shouldn't have went short right here is because news hadn't come out yet. But that's not why I didn't. I just still thought we would go up. If we had swept that high, if we had swept this high, I would have been willing to go short. But anyways, that's that trade. Alright, now let's wait. I'm gonna wait for the blue box to get as wide as the other ones. Okay. What time is it? 8:15. Okay, this is June 5th. I don't think I traded this day. Unemployment claims came out at 5:30. I do not care about an orange folder. I don't even know why I showed them. Oh, I have them shown in case like Trump speaks. I won't trade while he speaks. I'll trade after or before. If it's way before. Not if my trade will intercept the time he speaks. Anyways, so unemployment claims came out at 5:30. I don't really care. See what happened. Okay. 9:10. Time to mark out lows. Wait, let's see if where I wanted to go. Yeah, honestly, I say I do a 4-hour break structure, but I really don't. But I mean, the most recent 4-hour break was right here, because this wick is a little higher than that one, and then we closed above it. You could use that to go long, but I wouldn't have. I would just look at the levels. Okay, there's this high right here. We already swept it. Okay, so we already swept that high. I don't really see a reason to go long as of now. So keep that noted. Don't see a reason to go long. Okay, wait, no, I did try. I took a short this day, actually. If I was doing a 1 and 2, oh my god, I could have been past the funded account if I would just do 1 and 2 instead of taking partials. But then I actually like back tested it, and then I realized, okay. And I was only trading with $300. I was only risking $300. And I was averaging like $300 per trade that I won. Okay, my bad, I got a call. So anyways, I already marked out these lows, but so those are reasons to go down. I'm not looking for longs because that got swept. Plus, look at that wick. If it's a pretty long wick and the high resistance liquidity got swept. This is all pre-market, by the way. I was really confident that it wouldn't take out this wick, because now that's high resistance liquidity. But anyways, it's like 2 candles, because I know it forms. There we go. Okay, so we're still in pre-market, but I already know when market opens I want this high to get swept. Oh my gosh, keep doing that. Okay, market opens, right away we sweep it. Right away we break structure to the downside, because we closed below that low. Right there. We wicked above this high and we closed below it on the 1 minute. 1 minute breaks and 1 minute fair value gap, inverse fair value gap. Those are going to be the way you enter. Use the 5 minute for lows. Only 5 minute lows to get swept, by the way. Or like those high resistance to draws on liquidity. But anyways, short there, stop loss there, target of 1 and 2. I actually don't think the lowest. I think this would have been a losing trade. I don't remember if that low got swept. I think just these got swept. I did take profit there, but I won this trade, but with the new way I take profit, I wouldn't have won this trade, because I don't think it got swept. Oh no, it did. Okay. I'm low-key relieved that the 1 and 2 won, because I didn't think it would win. I thought it lost. But yeah, so we won again. Anyways, next day, I gotta hurry up. I gotta eat, and my mom's about to get home. Alright. It's 8:30. It's Friday. Let's just say we already won the 3 trades for the week, right? By the way, Monday this strategy formed. We would have also won a trade Monday, so that would have been 4 winning trades, but because after the news came out and the other trade won, a long model formed, I remember. Let's go June 6th. 5:30, all the news came out, non-farm employment change came out. Let's mark out, let's wait till we get more to market open actually. There you go, 9:15. I don't remember if I traded. I don't think I did. We got those lows. We got relative equal lows. Those are relative equal. They're pretty close. We do have reasons to go down, but we still have this high. Yeah, we still have that high, so I'm more willing to go long. And then there's also this. I actually remember this day now. There's this high too. I didn't trade this day. Now I remember. 2, 3. Okay, market opens. Still, that low didn't get swept. Wait, you're probably wondering, why didn't you go short? Why weren't you willing to go short after this pre-market high got swept? Because I'm more willing to go long. I see reasons to go up. And longs are just more probable. At least the time I trade. I don't know about your session. But anyways. Yeah, I mean, we never took out any of the levels, and then I think this is the time I stopped. Yeah. So I would have stopped trading around here. So as you can see, none of the levels got hit. I just closed the charts, didn't look at them. We reacted off of this order block. I don't trade off of order blocks, but yeah, that's what happened. You're probably like, oh, why don't you trade order blocks? Because I'm not that good at them. Like, only trade that you're good at. This strategy might not work for you. I mean, it works, but like, you might just not. You might be better with other ways of trading. Yeah, now we're gonna wait. Now we're in this week. I remember all the trades from this week. I'm gonna tell you about a trade I lost and why. One of the things I said earlier in this video, why you wouldn't want to do it. Okay. So I'm gonna just go back right there. This is right before market open. This is Monday. I did win Monday. I forgot to remove all drawings. Hit that. Oh my. Okay, there's reasons to go up. We have this high. We have this high. There's reasons to go up. Obvious reasons. I don't really see a reason to go down, to be honest. There's these lows there, but I don't really care. Like, I'm automatically looking for longs. If there's a reason to go long, I'm just focusing on longs. So let me just mark out pre-market lows. Okay. Swept these two lows. Oh, I was on the 15-minute. Oops. Swept out those two lows. Did we break structure inverse the gap after sweeping this low? This is a 5-minute low, by the way. You only want to trade off of 5-minute lows. Did we inverse or break structure? No. Did we do it here? No. When did we do it? After sweeping this low. What did we do? We inverse this gap right here. And we... The hell? Okay, well, we inverse the gap. I remember it broke structure. Oh, okay, yeah, I remember what happened. I entered here. Okay, I'm gonna show you what you should have done, and then what I did. So right there, enter off of the inverse for value gap. For value gap there. We didn't inverse it here, we inverse it there. Target I wanted to. As you guys can see, it's pretty obvious you would have won. Well, here's what I did. I didn't enter because this break of structure got invalidated. When the wick goes above, if the next candle closes, you still can't enter because it has to just, as soon as the wick hits it, it has to close above. If not, you don't enter off in the next candle, no matter where it closes. But you would have entered off of the inverse for value gap. Just want to call that out. But anyways, so we went like this. We went back down here, sweeping another draw on liquidity, and we broke structure to the upside. And I was just so confident that we were gonna go up because we also broke structure on the 5 minute. So as you can see, we barely. Bro, what? Did we not? Bro, we didn't. What the? Damn, we didn't even break structure. Honestly, shouldn't have entered. Like with the strategy I had then, I wasn't trading inverse for value gaps yet. I shouldn't have entered. I did end up winning though. I made 800 that day. No, I made 300. I wasn't trading with bigger size yet. Yeah, you would have entered. I already showed you guys actually. Let's go to the next day. Yeah, guys, today I'm about to show you the trade I lost now. And this wasn't my strategy. So far, none of my actual strategy trades have lost. I don't remember any of them losing throughout like all my trading, like on futures, but I'm sure it did. No strategy has 100% win rate. But anyways, so 5 minute, that's 910. Look, mark out lows. Highs. Reasons to go up. This draw on liquidity. This is also a really just low volatility day. I don't know what that noise was. But as you can see, market open, pre-market we swept those lows. Broke structure above those highs, but we swept the low pre-market. We did not sweep. This low was swept right here. This is pre-market in this bluish area. So automatically shouldn't have entered that trade. But I didn't have this. I didn't have like a complete strategy yet. Like I was still entering off of what I've seen work. Because I'm not gonna lie, I did see this win play out many times. It did win, but I've also seen it lose. For me, I just want to trade what I see is most probable and I'm most comfortable with. So I had stop loss there. And then I had my take profit. Let's just say you were doing the 1 and 2. First of all, it's really terrible. Because it would be above this liquidity. I wouldn't have even, like, yeah, it was just ugly. I wasn't aiming for 1 and 2 though. But, you guys will see right now I lost. Boom, right there, lost. I think we did end up going up. Yeah. It happened. I learned never to enter, never ever to enter unless we sweep liquidity. Because look, the liquidity sweep hadn't happened. So what happened while market was open? We swept liquidity. And honestly, I wouldn't have entered because this was after my session. But my model did form. Swept liquidity, broke structure when we closed above this high. Wouldn't have waited for the gap to get inverse since we already broke structure. And then, I'm not going to mark it out. You already know I would have won. Like, just look at it. There. The rest of the week I won. The 2 trades I took, I didn't trade today. But let's go to that. Almost done. Okay, we'll go to the 5 minute. I think I only took longs for the rest of the week. I remember this trade actually. I think this was news, yeah. Oh shit. I didn't even realize. Okay. We're in pre-market. how long? 10 minutes before market open. We have these lows. There's just these highs here that I would target if I were to go long. And this high. Now this is the day I started risking more. So I'll just tell y'all what I did as we go. Okay. Swept pre-market lows. Oh my. Swept pre-market lows. Then, okay, we didn't break structure yet. Okay, what's this? Inverse Rally Gap. Okay, on top step X, it was an inverse Rally Gap, so I entered. Like on the chart, top step X provides. We ended up inversing it here. You actually wouldn't have won if you were trading on the trading view charts. I entered there. I entered right there. And then I was targeting this high. Oh my. I was targeting that high, which did get swept. Honestly, let's just say this trade lost. So I actually won. I made $800. But if you traded off of that, you actually would have lost. Okay. So yeah, I think you would have lost. So I remember after it swept, this high went down. Okay. As you can see, you would have lost at this time. So yeah, first losing trade that I've shown in this video. Obviously in the past, other trades would have lost. Like, no strategy's 100%. But the rest that I've shown were. And another thing, if your first take profit is before the 1 or 2, sometimes you might just have to leave your take profit there. This is when I took profit. This is what I would have done, even though I'm saying the strategy is the same for a 1 or 2. My first take profit is right there. And this is like the thing that swept. Oh my gosh. This is the thing that swept liquidity. This is like news. This is like high resistance. It's likely not going to go all the way up there. I closed my full position here. Yeah. Would have lost if you're aiming for 1 or 2, which is my strategy. I would have lost if I knew what I know now that day. First losing day. I actually didn't realize that, to be honest. Okay, select bar. This is gonna be the last one. I'm gonna show you why I didn't trade today, and then we're done. This is a really beautiful entry, to be honest. So, pre-market low, right there. What time is it? 9:10. I saw a reason to go up from these relative equal highs. Some people might have went short because of these relative equal lows, but for me, even if there's a reason to go short, if there's a reason to go high and we get a long entry model, you take a long if it's on NASDAQ, or I don't trade ES, but I'm sure it's the same for ES. So anyways, we'll go to. Okay, we're right out market open. Two more candles. One. There we go. Okay, as you can see, as soon as market opens, we sweep this low and we break structure to the upside when we close above this high right here. At closing above this high, or this high would have been a break of structure. This candle closed there. So, take profit, entry there. Oh my, that's so annoying. Entry there. Stop loss there. Take profit where? Right there. I had another I also thought it would go up to these highs right here. These are relative equal highs as well. These ones. So that day I was holding until there, and I was trailing my stop loss, and I left somewhere around here, making only 600. So yeah, but the 1 to 2 did win. There we go. Okay, those are the last trading days of the week that I took. I saw a reason to go up, which was this high. I don't think it ever did it, but we'll see. Yeah, we never did it. You would have been taken out by Top Step right there, and then that's Warren News, by the way. Okay, I'll show you guys. So another thing, I didn't want to trade today because of Warren News, but we'll still go to it. A little bit more. Okay, pre-market, we have these lows, relative equal highs. That's London's high, by the way. This is London's high. Fair value gaps, so that's reason to go up. Boom. As soon as market opens, we took out one of the reasons to go long, and we never go back down to sweep those lows before taking out, or before the session ends. We never had a reason to enter. 7:30, we sweep these lows. I'll show you. Okay, so 7:30 was right. This is 10:30. This is EST. I have marked out. I have New York session time marked out, but I'm from LA, so we do Pacific time. But 7:30, 10:30 if you're from anywhere with this time zone, you wouldn't have gotten an entry. Because although we swept these highs, there was still a reason to go long. Fair value, highs up here. There's still reasons to go long. And I mean, as you can see, these basic structures did not win. I mean, this wasn't one. This one didn't win. Got wicked out. This one would have won, to be honest, but wouldn't have entered because it's not my strategy. And wouldn't have entered off that 5-minute break right there because it's not my strategy. If we swept liquidity and then did it, I would have entered, but we didn't. Yeah, we swept this low and then we ended up going back up. And that's it. So that was it for the week. Now I'm gonna get into the emotional aspect. I'm lucky gonna make it quick though. Or you know what? I'll make a whole different video on emotions. Today was just a straight strategy video. If the strategy does not form, don't place a trade. But anyways, I hope you guys enjoyed this video. It's pretty long. It's my longest video. And I'll see y'all again soon.